Hello, everyone. Hope you're doing well. Hopefully, you had a very Merry Christmas, and certainly hope you have a wonderful and safe New Year. Hopefully, you're preparing for the 2025 and you're going to up your game this year. Anyway, I wanted to hop on and give a little update on some of the strategy with using this SMM or simple market metrics indicator or a set of indicators. I've been spending a lot of time working with it and actually been in the Discord. Their Discord's really good. There's a lot of really good members. Um, and I really like this. There's a new channel right now that was set up called the Backtest Instructions section. Backtest instructions only, where there's no commenting. It's just people are coming up with strategies to use the simple market metrics indicator and kind of finding new ways to come up with things like stop losses and things like that. Because the SMM indicator is really it's a scalping system, and it can be kind of tough to control risk. But anyway, also to of note, this is not the original way. A lot of these strategies are not what's recommended, so just want to put that out there. But anyway, I wanted to go over one of my favorite strategies is this 2-minute strategy here. Basically, it's just, you can do it a couple ways, but it's using the 2-minute time frame. And what I wanted to show is kind of one of the problems with using the 2-minute, first of all, and then kind of show you how I've mitigated or trying to mitigate some of those problems. So essentially, there's a couple ways that you can find a signal. You can, of course, again, I'm on the 2-minute time frame here, but you can just take the signals that come, in the chart, and that's part of the strategy. There's also an alternative method for getting into trades, and that is they call it the 4G, 5R, 5G, something like that. Anyway, basically all it just means is you just using 5 properties or 4 properties in this case, where we have a green dot, a green MFI line or MFL line, a green Heikin-Ashi candle, and a green profit wave behind it. So that's 4. 4G, 4 greens, in which case that would be a trigger candle to enter a trade. So anyway, long story short, that's just 2 methods to use this 2-minute. Again, going back to the original problem that I have a lot of times is this is a really good example here where we had a sell signal. In this case, there's a lot of volume, and there was just this huge candle, right? And you can see the little white dots right here. That's the candle close. So that was the candle close, in which case you had, the way that some of these strategies work and the way that I trade it is I use a 1-to-1 risk reward 30 points. So if I were to do that, I'm going to show you what that would look like. Would be I would have a 30-point stop loss and a 30-point take profit, right? And of course, the problem with these long candles like this as an entry or trigger candle is there's a lot of room to pull back. And as you can see, this trade here would have taken me out. I don't think I traded that this particular day, but it would have failed. And so, there's probably a lot of ways that you can mitigate that. I think, you could, wait for anything. It could be, come back into the profit wave or near the profit wave or close into the profit wave or go above the profit wave. Part of the problem I have with this though is that it's kind of all over the place. It could be any of these things. And, in the heat of the moment, you really want to be kind of simplified execution. And with this, with this method or these methods, there's no real consistency or real consistent way to apply a pullback method. So anyway, that's what I was looking for, and I think I found something. So what I want to show you was if I were to take this trade now, instead of just jumping in on the close, what I would want to do is I would want to wait for whether it's the trigger candle or any subsequent candles afterwards. I'm looking for a close within the body of the candle before it. So in this case, this candle, the trigger candle, did not close within the body of the candle before it. The next candle here, you can see this is the close, which did not close within the candle before, the body of the candle before it. And then we got this close here. And as you can see, this candle close on this candle right here, the close happened within the body of the candle before it. Okay, that's basically it. And as you can see, what would have happened, that it would have worked out. So we would have entered here. We would have had a 30-point stop. See, it came really close, very, very close, didn't take us out, and 30-point take profit. So it would have turned, basically what it would have done was turn that losing trade into a winning trade just by taking that entry, using that entry technique. And again, it's not a guarantee. It's just giving you a bit more edge by getting a better entry. That's really all this is about. Nothing more, nothing less. And you can kind of continue doing that throughout the trend. As long as it's trending, you can kind of continue to do that until it doesn't work. So again, just look for those candle closes within the body. So you can see here, not here, didn't close within the body. Not here, didn't close within that body, but you see this one here, it closed within the candle body before it. So that would have been, let's just see what that would have been. Again, now in this instance, it's not an initial setup, so I wouldn't go for 30 points. It would be more of a scalp. But I probably would have had, my stop loss somewhere near the profit wave, and probably a 1-to-1, something like that. So that's just one way you can kind of pick up continuation trades if you spot those instances where the candle closes in the body of the candle before it. Again, just one more example here. You can see we had this reversal with the 4R, 4 green setup, 4G. You had profit wave is green, Heikin-Ashi candle green, MFI line green, red dot. So that would be a trigger candle right there, right? Is it there or there? Not sure. Either way, it doesn't matter. I'm looking for is a candle close within the body of the candle before it. So you can see right here, it's this candle right here. That would be the entry candle. And as you can see what it does, it's just optimizing your entry points. As in this case, we would have had 30-point stop loss, 30-point take profit, easily hit. And in this case, it really had zero drawdown. It really just went in your favor. And that's what I'm finding a lot of. This one here was really close, of course. Not saying it's not guaranteed, but it is giving you pretty good edge by having a better entry, for sure. You're going to get a better win rate. You're going to get a better overall everything if you can wait on pullbacks, and just identifying a really consistent way to apply to a pullback or finding a pullback. I think this is a really good way to do that. So anyway, there you go. Test it out. See how it works in your back testing. See if you see what I see. Anyway, hopefully that's helpful to you, and hopefully again have a great New Year's. Be safe and enjoy. Thanks for watching, everyone. Take care.